Trying to buy a home these days is a moving target because you have mortgage rates fluctuating and home prices fluctuating, so it's critical that you have a flexible way to adjust your strategy because you don't want to be caught trying to buy a home and then coming up short. I'm going to show you a simple technique that will keep you prepared for home buying no matter what mortgage rates or home prices are doing. You will discover how to aim at your target and hit it rather than miss. Hi, I'm Nicole Hamilton, a home financing and home ownership expert. Subscribe to my channel and you'll be the first to know when I upload a new video. The housing market is essentially one big market of people who need to live somewhere. It consists of renters and owners. And if you look at the prices for homes and also rents in the last few years, you notice that they're both going up significantly. Your best bet in this environment is to get yourself into a fixed rate mortgage, which effectively halts your monthly payments for the term of your mortgage. So your monthly payments are the same every year. You owe it to yourself to understand how to qualify to be a homeowner. But because of market changes in mortgage rates and home prices, you don't want to be caught flat-footed and unprepared, especially when things change quickly. You need a system that's reliable and can keep you on the path to home ownership even when the market changes. So now I'm going to take you through the 3 steps you need to know to figure out how much you qualify for in this tricky environment. Are you ready? The first step is to understand the formula for getting a mortgage, because obviously you need a mortgage to buy a home unless you're paying cash. The main framework is called the debt-to-income ratio, and it's a combination of your debt, income, and housing costs. And that might sound a little complicated, but it's not. It's incredibly simple. Once you understand the framework, you can look at 6 different loan programs or types and see the exact debt-to-income ratio required along with down payment and credit score requirements. And then this process, which seems opaque, suddenly becomes very transparent. Once you know your own debt-to-income ratio and the types of loans and programs there are and how to qualify for, you know if you'll be accepted as a buyer. So the very first step of knowing how much home you can afford, you can do on your own even before you contact a mortgage professional, because it's the same process that they use. And most people think that they need to put a much larger down payment than they actually do, when in reality, the average down payment is much lower than 20%. Just go to this link right now and grab this free resource before I go on to step 2. And while you're doing that, I'm going to tell you this joke. It's a dad joke, and it is, what did the 0 say to the 8? Nice belt. So the second step is to look at the various ways that you can adjust the housing costs to meet your debt and income and figure out how much house you can qualify for. So right now you have in your head your idea about how much you earn, how much you owe, and what sort of house price you might be looking at in terms of a purchase. But you probably have more options than you think, because there are a lot of different thresholds for income cutoff, debt cutoff, and down payment and credit score among the products that are available. Once you understand the framework and the products, you can look at things like adjusting your housing costs down, your income up, or your debt down, or all 3. You can look at your debt and income today and figure out what your housing price target is, but you can also look at some months down the road and see what your debt and income might be then, and recalculate your housing price targets. The third step is to look at homes, because nothing ties a dream to reality than actually going out there and looking at homes and seeing what you can get and thinking about what you might want now or in the future. By following these 3 steps, you can plot your way to home ownership with crystal clear insight into the process. You'll be able to clearly see what the roadmap might be for you to take you out of the inflationary rental market environment and get you into a fixed rate mortgage where your monthly payments are essentially flat for the term of that mortgage. So I hope you find this helpful. Download the information here. So just to recap, what you want to do is you want to understand the ratios and the framework for the programs that you can qualify for. Then you want to take your information and sort of plot out sort of what your target house price is and whether you can achieve it now within those frameworks, or if you want to set a roadmap to achieve it in the future. And the third thing in the process is to start looking at homes just so you get a sense of housing costs and get more reality behind it. If you find that you're not where you want to be or the market changes again, no worries, you can still stay on the path to home ownership. You now have a proven strategy for aiming for your goal, readjusting as needed without wondering if you're headed in the right direction. Get a copy of the Formula for Home Ownership at the link below.